This week has been a light week for economic numbers. We had some housing numbers. We're going to have some more later on this morning. The little bright spot we had was the existing housing numbers. Sales were up 4.3% in January. Problem was, it's not as bright as you would suspect because they downgraded December's. And if they didn't do that, the January number would have been a little bit worse. So, so it really wasn't that good. However, the good parts of it were the inventory shrunk, the notification of delinquent loans shrunk. So the direction is right. Things are going in the right direction, but we still have a very long way about the housing market. A leading economic indicator is weekly unemployment claims, and that stayed even at about 255, 250,000, something like that. And if it stays in that area, that is indicative of a pretty good job market. Just going down there and then coming right back up to 400,000, that's not. It's got to stay down there. It's got to stay down there for a while. But it is showing that the job market in the United States is a little bit better. Earlier in the week, the Greeks and the EU and IMF agreed to a bailout for that next tranche of huge money that Greece wants. That is not, I don't see that as being a very significant event because there's so many hurdles still left to even get that money that I'm not convinced that the hurdles are going to be jumped. I doubt if the Greek citizens will want it. You got elections in April for Greek politicians. You have elections in Europe. A lot of people in Europe and Germany and the Scandinavian don't want to give them the money. So that I don't see that problem resolving itself. It's just not in the cards. The 17 EU nations have a combined report for their PMI report. And PMI, remember, if anything above 50 is expansion, below 50 is contraction. And their PMI report for the recent month was 49.7. So the EU, the 17-nation EU, is shrinking. Now, there might be countries like Germany and others that are growing, but the overall EU is shrinking. That doesn't mean we still don't know if they're in recession because we had to have 2 quarters in a row of GDP contraction, and all we've had is one so far. But most people, and I do too, believe that they are at least going to go into a mild recession. The China PMI was 49.7. That's below 52. So they're indicating that there's a contraction going there, not expansion. However, that was an increase from 48.8 for the month before. So it looks like China might be starting to expand again. But we'll see, but they're still below 50. Now, these are kind of unofficial numbers because we don't really know. Especially China, they're very secretive about their numbers and they don't have good reporting. That report was put out by HSBC, a bank, that PMI for China. So we really don't know. Therefore, it looks like, and if you've been paying attention, oil is now this morning at $108 a barrel because of the turmoil in Iran and the saber rattling going on there. There is no really reason for oil to rise because there's no increasing demand. Demand is actually shrunk. So there's no really reason other than worry and speculation over what's going to happen. So in the Middle East. So those are the issues we're dealing with right now. And the market is crawling up this wall of worry. It's slow, painful movement up. We are overextended. There will be a point where there will be a correction. The more overextended it becomes, the bigger the correction is going to be. So we really would be a health restorative event if we could just get that correction.